Hello everyone, I'm very happy to be speaking with you. Today, I'd like to talk about the project cost report and give you a brief breakdown of how this report helps you track the P&L throughout the project life cycle against an estimation cost. Everyone is giving their best to complete their project successfully. But what makes a successful project? Successful projects are those that first, meet business requirements, second, are delivered and maintained on schedule, third, are delivered and maintained within budget, and final one, deliver the expected business value and return on investment. Many factors contribute to project success, but a good project management vision helps you achieve that. This project cost report helps you gain the vision to evaluate project or production performance through budgeting and controlling costs throughout the project life cycle against an estimation of that project. And this is one of the key pillars of project management and is relevant regardless of the domain, be it manufacturing, retail, technology, construction, and so on. It helps to create a financial baseline against which project managers can benchmark the current status of their project costs and realign the direction if needed. Here, we will show you how this report can enhance your project management practices and help you streamline your financial tracking and decision-making processes. Let's get into this video and figure out how this report helps you track the P&L throughout the project life cycle against an estimation cost. Now, what we have here is an instance report of real-time tracking of project costs during their execution, which provides a clear picture of the actual expenses against the budgeted costs. By tracking revenue through sales and expenses through purchases and other site expenses, which are done by delivering the project to the client. From those tracks, it will show the current status of the P&L of the project at each stage. Here, I will start this report by showing the order details in a brief way for your instant reference. Those are month, the month in which we started the project. Order no, which is automatically generated by our system for internal tracking purposes. Order date, the date when a customer places an order. Customer order number, this is a unique number that gets assigned to an order placed by the customer. Gross value, the order value, approved by the customer. Freight amounts are costs that a receiver pays for transporting goods from a source location to another destination. The other amounts are costs that a receiver is paying for packing and other services that are provided by us. The assessable amount is the value that is used for the calculation of tax for this customer order. The tax amount is the amount of tax charged with respect to taxable goods or services as per government norms. The total amount is the sum of the assessable amount and the tax amount which the customer is going to pay for this project. The retention percentage is the percentage of gross value held back by the customer until the project is complete. And finally, the retention amount is the amount of money held back by the customer until the project is complete. In this section, we are presenting to you the income amount by showing the breakdown summary of sales invoices that are created against the customer for their project. I'm going to explain this report in a brief way for your instant reference. Year, month, the month in which we raise sales invoices against the project. Invoice number, which is automatically generated by our system for tax and accounting purposes. Invoice date, the date on which we raised sales invoices against the project. Gross value, the gross amount is the amount you charge for your product or service, which has been set by you. Discount amount, the discount amount means that you are giving the customer any kind of discount for that invoice. The assessable amount is the value that is used for the calculation of tax for this sales invoice. Based on this assessable amount, we are going to pay the required tax to the government for this sales invoice. The tax amount that we are going to pay to the government for this sales invoice. The total amount is the sum of the assessable amount and the tax amount which the customer is going to pay for this project. Receipt amount. The receipt amount means the payment that you received from the customer against that invoice. Balance amount. The balance amount means the remaining payment that you have to receive from the customer against in this section, that invoice. We are presenting to you the material expense amount that you have spent to purchase the materials for the entire life cycle of the project until it is successfully delivered to the clients. Raw material purchases always play a crucial role in your project expenses. We are tracking and illustrating each and every purchase of raw materials for that particular project individually for your view. In this section, we are presenting to you the service expense amount that you have paid to the job worker to deliver the modified item based on client requirements for the entire life cycle of the project until it is successfully delivered to the clients. We are tracking and illustrating each and every service that you paid for that particular project individually for your view. In this section, we are presenting to you the site expense amount that you have paid for the particular project site throughout the entire life cycle of the project until it is successfully delivered to the clients. We are tracking and illustrating each and every site expense that we paid for that particular project individually for your view in a monthly breakdown format. Here, I am going to conclude this report by showing the project cost in the form of profit and loss from the user-given data of income and expense. I am going to explain this abstract view in a brief way for your reference. Here, order amount. This is the total amount of sale order value given by the customer. Invoiced revenue. This is total sales invoiced amount which are created entire life cycle of this project against customer purchase order. Balance amount to raise invoice. This is the balance amount that you have to create sales invoice to the customer against that customer purchase order. Retention amount. This is the predefined percentage amount based on the customer that is held back by the customer until the project is completed from the gross amount of each and every invoice that you have raised. Receipt amount. This is the total payment that you received from the customer against those invoices created for this project. Pending receipt amount. This is the total remaining payment that you have to receive from the customer against those invoices created for this project. Actual receipt amount pending after retention. This is the remaining payment that you have to receive from the customer against those invoices created for this project after subtracting the corresponding retention amount from those invoices. Expense amount, which shows the total amount of material expense, service expense, and site expense for your reference. Total expense, which shows the addition of material expense, service expense, and site expense for your reference. Profit and loss, which shows the profit and loss amount by subtracting total expense from invoiced revenue amount for your reference. Profit and loss percentage, which shows the profit percentage of this project based on the invoiced revenue amount.